Welcome to my channel Kanwal Sidhu. In today's lecture session, we are going to discuss the concept of cascading effect and how this cascading effect or double taxation system is removed with the implementation of GST. So for easy, simple and precise lecture sessions, do like, share and subscribe my channel. So what is cascading effect? It is basically the double taxation process, or we can say that in cascading system there is tax on tax. That is, tax is charged at each stage while the product goes from the manufacturer to the wholesaler to the retailer then to the consumer. So this effect is removed with the implementation of GST, as the seller has to only pay the net tax and not the entire amount of tax. So we will discuss this in detail with the help of an example. Now let's take an example to know how GST implementation has removed the cascading effect. The example is explained in this figure. The upper portion shows the old tax system and the lower portion of this figure shows the present GST tax structure. Let's consider that in both cases the rate of tax is 10%. Suppose a pen manufacturer buys a raw material for rupees 50 and he adds value of rupees 50, or we can say adds margin of rupees 50 to it. On this, the manufacturer pays 10% tax, that is rupees 10. So we can say that manufacturer sells the pen to the wholesaler for rupees 110. Then similarly, wholesaler adds margin of rupees 20. He also has to pay 10% tax. In this case, the wholesaler will sell the pen at rupees 143 to the retailer. And retailer also adds profit of rupees 10. So we can say that amount will be 153 in this case. And with 10% tax, the retailer will sell pen to the consumer for rupees 168.3 paise. So in this case, there is tax on tax, or we can say there is double taxation, which is known as the cascading effect. So it is the main reason for high price of any product. Now let's take the second case, that is of GST system. In this case, the manufacturer buys raw material to make a pen for rupees 50 and adds value of rupees 50 to it. So in this case, the GST tax will be charged on the value addition, that is rupees 50, for which we can say that the tax will be rupees 5. So manufacturer will sell the pen to the wholesaler for rupees 105. When the wholesaler adds rupees 20 as a margin to it, then tax will be charged on rupees 20. That will be only rupee 2. So the wholesaler in this case will sell the pen to the retailer for rupees 127, that is 127 rupees. Similarly, retailer also adds his margin of rupees 10. So in this case, tax will be rupee 1. The retailer will sell pen to the consumer for rupees 138. Now from this figure, we can conclude that in the previous tax system, the pen cost rupees 168.3 paise to the consumer. While in the modern GST system, same pen will cost to the consumer for rupees 138. So the cascading effect or the double taxation is removed under GST system. So this was all in this short lecture video where we discussed the concept of cascading and how this concept or this double taxation concept is removed with the implementation of GST. Thank you.